Hi folks, welcome back to the Wikipedia world, and I am Abhinay Gupta. And today again we will continue with the chapter Audit and Auditor. Right, so we have been into this chapter for quite some time now. I think we have had already 9 to 10 lectures on this chapter. Right, now today we move ahead. The last class was a little important one. Why? Because we were discussing a number of cases with respect to section 141, because that is one of the most complicated section in this chapter. When I say complicated, is you miss out on tiny bits. That's it, right? And that is one portion from where you generally get the questions in the examinations. Right? Now today we move ahead to understand the process of the remuneration of the auditor and also the powers and duties of the auditor and what is to be done with respect to the accounting standards. Right? So these two sections, the remuneration, this, do not have direct questions in the examination. Obviously, nobody will go ahead and ask you what is the remuneration of an auditor, or please let me know the powers and duties of an auditor. Right? Generally, those kind of questions, they don't pop up. Right? But in the power and duty, there can be a case study where something has been implemented, something has been performed, and then there's a question, which is again a trick question. Right? And then you have to involve that, okay, but this was a duty of the auditor as well, or this was not the duty of the auditor at any point of time. Right? So you may relate to this section from other ways. Right? But otherwise, direct questions on this section do not appear in the examination in general. Right? I don't take any guarantee. Right? So, but anyways, direct or indirect, you should have a complete understanding of section 142 and 143 as well. Right? So in today's lecture, we would be covering both these sections, 142 and 143. So we start with the remuneration of auditor, section 142. So remuneration of auditor, it is not a very rocket science thing. Right? So there are certain provisions which relate to the remuneration of auditor. So it specifically says that the remuneration of the auditor will be fixed in the general meeting. Right? You cannot say that, okay, if the company's turnover is this person should be the remuneration. No. It always depends, because whatever be the size or the structure of the company, right, the work for the audit may vary. The regulations, the other complications, the other involvements, a lot of things that can vary. Right? And there are a lot of things, and it depends upon the auditors as well. Right, what point they think, what point they don't. So if you look at it on the entirety, right, you people are CA final students. So most of you who are not going by the dummy procedure may be attending your offices, right, for your internship. So there you see that if you get an audit, there may be many things you predict, but things turn out to be otherwise. Right, you think, okay, this is a very easy topic, let's complete this, prepare the work paper and move on, and then you find the complication over there. So it is always fluctuating. So you cannot actually define that, okay, this should be the remuneration. Okay, so in that case, what they do is let the members decide. So the members and the auditors, they'll have a discussion. Okay, this is the remuneration we are planning to give. If you agree, it's okay. Right, so they have it in that way, in that fashion. So it shall be fixed in the general meeting with the members. Right, and it will be fixed in such manner that will be decided in the general meeting. So even the manner of fixing the remuneration, of how much to give, how to calculate, and all those things will also be decided in the general meeting. So the remuneration of auditor directly depends upon the auditor and the members. Right? There is no other impact from the law side. Right? But there are certain situations where the remuneration are fixed by the board as well. By the board? Why? Why do you think will board play a role in the remuneration when members have taken charge already? Understand. In the beginning of the lecture, in the beginning of the chapter, we had discussed certain topics, right? Appointment of the first auditor, appointment of the subsequent auditor, reappointment, and a lot of things. Now understand, when is the first auditor appointed? If it is the case of a CAG, right, then it's a separate story. If it's the case of a director directly, that means if it's not a company whose accounts are being audited by an accountant appointed by CAG, then it's a different story. Right? So in that case, the board of directors, right, they have the 30 days time to appoint an auditor, and if only they fail, that the matter shifts to the members in the extraordinary general meeting. Right? But understand, when the directors, right, they are appointing the first auditor, it's been 30 days and we haven't had any general meeting. right? But when we are appointing an auditor and the auditor takes charge, the remuneration has to be decided before that. So do you think member will come together just to decide the remuneration? The answer is no. So in that case, where the directors are appointing the auditors, the directors will themselves have a discussion with the auditor like look, we just started and these are the only procedures that you need to perform. It's the very first year. So this is what we are ready to pay you. If you agree, let's start. Right? So in the case of the first auditor, the director will determine the remuneration. Otherwise, when the auditor is appointed in the general meeting, the members in the general meeting will either decide his remuneration or decide the procedure for calculating the remuneration. Right? And when we talk about remuneration, we also include the out-of-pocket expenses. Right? Or we could say the expenditure which is incurred by the auditor in connection with the audit of the company. Now, for example, when I used to go on audit, right, if I remember the old days, so from my home I used to take a cab to the office, right? There are certain things that I need to be performing for the company, right? So I had to, maybe I had to pay for that cases, right? There should be traveling, where I used to travel to different states, to their different locations for some purpose, right? And if at that point of time I'm booking my flight, I'm booking my hotel and everything, they are also out-of-pocket expenditures, right? So anything that I spend out of my pocket, right, for the purpose of that audit of the company, that means if that audit was not in my life, I wouldn't have incurred such expenditures. The expenditures are only being incurred because I am conducting that audit. So those expenditures are also part of remuneration and will be paid to me by the company, right? And they are termed as out-of-pocket expenditures. So generally they have a percentage that if this is your audit, this percentage should go in your out-of-pocket expenditure, not more than that. So that even we are limited, right? Otherwise we just go haywire. So the out-of-pocket expenditure will also be included in the remuneration part. Any facility to the auditor. So if the company themselves provide any facility to the auditor, it will be included in the out-of-pocket expenditure, right? Now there have been times when the clients have been with very stringent deadlines, right? And the team is a little small. So what we needed to do is to perform 3 days task in a day. Yeah, you heard me right. It does not mean that we used to be very efficient to do that, but it means that we used to spend a lot of time on that. So if it's an 8-hour journey a day, we ended up spending 24 hours. So that means no time to go back home. So please put up in the hotel next to the client or in the guest house. So that expenditure is incurred by the company for us, right? So this is just an example and on the lighter note, but yeah, there are a lot of expenditures that even the company incurred to facilitate the auditors, right? But again, understand that remuneration will never include any remuneration paid to the auditor for any other service rendered by him that the company has requested. So anything related to the audit will be included, but anything that is not related to this audit, but it's a remuneration for some other purpose, so that will not be included into the remuneration for audit. Got the point? So that is about the remuneration, nothing else. So it is fixed by the members in general. For the first auditor, yes, the directors. And then what is to be included? The out-of-pocket expenditures and anything what the company spends for the auditor's facility is also included into the remuneration portion. Okay with that? Now again, one thing, if you see why are they included is otherwise if they don't include it over here, what head will they open? Miscellaneous expenditures for audit? No, right? So in that case what they do is they club it. Obviously it is going to the auditor. Maybe for his personal use or maybe for our use. I mean, if I'm giving him a revenue, what is earning out of it? But even these things, for my company it's an expenditure, right? So I included into the remuneration paid to auditor, that even this expenditure has gone into audit, right? Next, section 143, powers and duties of auditor and auditing standards. Now this section is gonna be a little lengthy section, right? I have two options. One, to break it down into 2 lectures. Second, to wind it up in the first lecture itself. Now what way that is convenient for you? How do you let me know is the question. Let me do one thing. I'll proceed by it, but if I see that it's taking really toll, it's taking really long, what we'll do is we'll cut short in between, right? Okay, so when we talk about the powers and duties of auditors and auditing standards, right? It is section 143 that takes into play, right? It casts certain duties, right? This section, they cast certain duties that, yeah, this is something that has to be performed by the auditor. But along with the duties that are being reminded, there are also certain powers that they can discharge, right? Why? Just to perform their duties more efficiently. And understand one more thing, these duties and rights, right, that the auditors have been given cannot be restricted, cannot be limited. When I say cannot be limited, does not mean that they have unlimited power to do anything. It means that it cannot be limited by any resolution of the company or anything written in the article of the company. Do you understand what I mean to say? Now understand, if the auditor goes ahead to perform certain things, and then the members, they call up a meeting and they say, okay, we pass a resolution that you cannot do this. So do you think the auditor will be restricted? Because if that is a restriction that can be implied on the auditor, then anywhere where the company finds it troubling, that okay, if the auditor gets in, it's a pain, you understand where, right? So in that case, what happens? In that case, they will pass a resolution and stop the auditor. So henceforth, those limitations and restrictions on the auditor has totally been taken away. That power has been taken away from the members as well as from the articles, right? So when they have been taken away, there are certain rights and duties that have been given. So let us look at the rights and duties as per section 143 subsection 1. So the auditor has the right to access the books. Now when I say access the books, is that the auditor, right, to perform its audit, to perform the analysis of the financial statement, may require a lot of information from the company. Right, there are a lot of books that the company has maintained, a lot of vouchers that they have maintained. Like for any transaction, they will have vouchers. Right, vouching and verification, the two basic tasks that you people as a staff accountant or as a trainee, whatever name we call, you people get, right? So what we as trainee generally get is vouching, verification, and those kind of documenting and work paper management and those kind of things. Right, in my first year of internship, even those were the things I had received. But okay, eventually over the second, third year, got the in charge of the client and everything. Those things happen as and when you grow. Right, so you have the right to all the books and all the vouchers that are maintained for the vouching purpose. Right, and then the right of the auditor, they extend to all the books, whether it is kept in the registered office or it is kept anywhere else. You get the point? So for example, you went for an audit in the registered office, but there are certain documents in the book that have been shifted to the branch or to some other location that they maintain in the same city. Now do you think, okay, going there is cumbersome or something, or the company says, sir, these books have already been shifted, please manage yourself in these books, the limited ones that are available with us. Is that possible for an auditor? The answer is no, right? So you go ahead and you take the books from anywhere and everywhere you want. You can call for those books. The books that belong to the entity that you are auditing. Right? You also have the right to all the records of the subsidiary company. Right? Because now when you think about if there are subsidiary companies, right, then you get into the concept of holding a subsidiary, that is consolidation of the books of account. Now how do you consolidate a book without having the entire financial statement of the subsidiary? Right, now you take the financial statement of the subsidiary, either you depend upon the auditor who has audited them, right, or if you want to get into certain checks, if you want any records to be viewed and verified, you can do that. Right, so for the purpose of consolidation, if you want an access to the books of the subsidiaries, you can do that and then consolidate the financial statement. Right, the next what we have is the right to require information. So when I say right, that means the auditor is entitled to require from the employees of the company or from the office of the company whatever information and explanation that he thinks is necessary to perform his duties more efficiently. Right? Now take any instance. I'm auditing a particular topic, right? And there are certain things I need to check, certain other records, certain other references that I need to check. Because I know, because if I go through them, I get more clarity and more confidence in whatever I'm doing. So I can ask the company that beyond what you have given me, these are the extra things that I require. And the company or the employee who is taking care of the audit cannot deny. It is your right. Okay, so these are the two rights you have. You have right to access to all the book and right to ask any information that you need. Now when we are talking about duties, the duty of the auditor is to make inquiries, right? And there are 6 certain inquiries that have been defined in section 143 subsection 1, right? So if we look ahead, if we get into it and understand the duties to make inquiries, then understand the auditor should make an inquiry whether there is any loan and advance that has been made by the company. You understand, loans and advances made by the company? It is not the loan that we have taken from the bank or financial institution or somewhere. It is the loan that we have given to somebody. So, okay, keep this money and pay us the interest. Although we are not financial institutions, right? But whatever loans and advances have been given by the company, right, they should have been given on the basis of certain securities. So what you need to see is whether all the loans and advances made by the company are secured with some assets as a backup, with some mortgage or anything, and whether the term on which they have been provided are not prejudicial to the company. You have to see that those terms, whatever be the rate of interest, whatever be the return policy, whatever it be, it should not be prejudicial to the company. That means it should not be hampering the company in any way. It should be in benefit to the company. Right? These are the certain things you need to check for the loans and advances. That they have been secured, there is proper security behind, so that if the other third party does not pay it back, I can get it by materializing whatever asset has been secured. Right? And second thing is the terms that are used for that loans and advances. Right? Those should not be prejudicial to the company. Now further, the auditor should also inquire whether there is any transaction, right, which are reflected in the books of account of the company and are actually prejudicial. That means, okay, the company is into operations, right? There are a lot of transactions that the company will enter into. But understand, if there are certain transactions which become prejudicial to the company, what do we do in that case? Getting the point? So you are not supposed to enter into those transactions. So if they are, it is the duty of the auditor to verify whether there are certain transactions existing and that has to be stopped immediately or has to be reported immediately. Right? Next, the auditor also shall inquire whether the loans and advances made by the company have been shown as deposits. Right? So this is something you need to check. I have made some loans and advances. Do I show it as deposit somewhere? Well, okay, this is my deposit, I'll take it off somewhere else. No, it is loans and advances, show it as loans and advances. Right? There are situations where when you are going on to audit a company, right, it may and may not be an investing company, it may not be a banking company. So if it is not an investing or banking company, right, then you should inquire as to whether so much of asset of the company, which they consist in shares and debentures and other securities, have been sold at a price less than what they were purchased by the company at. Right? So your shares, debentures, or whatever it is made out of certain assets which you have got, right? So whatever cost you paid for the purchase should not be higher than the cost that you have charged when you sold them. It is not that you paid something more and you took something less. You are at loss, right? You should have paid less and you should have got it more. That is the benefit, and that is in the favor of the company, and that is what is actually supposed to be done. Then you'll also see that the expenditures have been properly categorized, right? You should see that there is no personal and revenue expenditure mismatch. That there are certain personal expenditures done by this and this, and they have been shown as revenue. When I say personal expenditure, means the expenditure that the owners or somebody who is in charge of the company, they make for themselves, right, and then they show it as operating or revenue expenditures of the business, so that then they can knock it off and it is not in their account. So those kinds of mischief and those kinds of misleading transactions are not present is something that you need to check. Right? So these are basically what you have to agree on. These are the duties of the auditor to go ahead and check. Right? Then the other duty of the auditor is to make report, which is section 143 subsection 2. Right? Because understand, the final thing that you need to do when you go to a company for audit is to hand them over an audit report, whatever it may be, qualified or unqualified, right? It may be adverse, there may be a disclaimer, it can be anything, but the end objective is to give a report on what has been done, what has not been done. That is your idea, right? To go and check the entire thing. So the auditor shall make a report to the members of the company. Right? Whatever report they're making, they make to the member of the company. Now in the report, what the auditor is supposed to report is the entire detail of the accounts that has been audited by him, the accounts that I have examined. So this is the detail of the account. I'll attach all the financial statement and the P&L. So this is the detail of the account that I have examined, and the financial statement are required to be laid before the company in the general meeting. So the main first 2 pages of the financial statement, that is on the face, laid down in the general meeting for the members to see and analyze and understand, to be a little technical and analytical on that, right? And all the related accounts are something you need to also present that yes, I have examined them, right? And then what you have to share in the report is whatever you have examined, did they actually represent a true and fair view, right? So if it is an unqualified report, that means everything is okay. Whatever I have checked were in line with the requirement of the regulation and the standards and everything, and what the company has performed is good, so there is no qualification. But if there is a qualification, when does it occur? The qualification occurs only when there is something that deviates from the true path. And then you qualify that, okay, this has been done in this manner, but this should not have been actually done in this manner, but this is the correct manner of doing it. Right? So the auditor will go ahead and explain the true and fair view or the state of the company's affair at the end of the year. So the affairs that the company is into, I mean whatever the operations the company is doing, they are doing it in true and fair view. Right? You'll also give the true and fair view of the profit and loss statement that you check. That yes, the profit that are being shown in the book are actually the profit that they are earning. Right? It is true. I would not say it is true and complete, but it is true and fair. True and correct is something I cannot say, right? Because I'm not 100% sure whether it's correct. It is just an opinion I'm giving. So what we do is we give a true and fair view. Along with that, whatever has been the cash inflow and outflow, you maintain a cash flow statement of that and attach it over there. Right? And if there are certain other matters which have been prescribed, then the auditor has to report them as well. Okay? And then he should also prepare his report after taking in account the provisions which have been laid down by the Act and the standards, the accounting standards that have been laid down. Now these days we have started following the IFRS concept as well, right? So you'll have to see whether they all are in line. So whatever report you prepare, it has to be taken in accordance with the provisions of the Act and the IFRS requirements as well. So this is now the duty of the auditor. Clear with that? Now next thing that we can move ahead with is the report on the principal assertions. There are various assertions that you need to check and then you need to report on them. So there are somewhere close to 10 assertions. So if you want, I can take you through those 10 assertions. The slide is very well prepared, right? But what I think is the lecture is going to be a little lengthy. So we'll cut it short and take them up in the next class, right? So we'll just break the lecture into 2 so as to keep it light on your head. So that will be all for the day, students. We'll get back with the remaining portion of this lecture in the next lecture, right? So until then, this is Abhinay Gupta signing off. Thank you and bye-bye. I'll see you guys back in the next lecture. See ya.